This is the big breaking story at this hour. The International Monetary Fund, or the IMF, has just raised a red flag on global growth, and that is our starting point right here on the market report. The global economy is struggling to grow, and there does not appear to be a growth spurt in the offing this year. The International Monetary Fund, or the IMF, has slashed its global growth forecast for 2015 to 3.1% from the earlier projection of 3.3%. India has not been spared either. The IMF has cut its growth projection for India from 7.5% to 7.3%, but India still comparatively, whether it's the developed economies or the emerging economies, growing at a faster clip. CNBC TV 18's Ritu Singh brings you the IMF global growth forecast.
The collapse of the Lehman Brothers marked the start of the world's worst economic slowdown, and 6 years since, growth remains elusive. The International Monetary Fund's latest report on World Economic Outlook blames this on the weakness in some large emerging economies and oil-exporting countries. So the IMF has marked down global growth in 2015 to 3.1% from 3.3% projected in July. However, it has held out hope for growth to climb to 3.6% by 2016. In the IMF's view, the world economy is at the intersection of three big forces. 1. China's shifting focus from an investment-led economy to a consumption-led economy. 2. A fall in commodity prices. And 3. Global repercussions of the imminent interest rate hike in the United States. Given this situation, IMF expects advanced economies led by the US and the UK to grow at 2% in 2015 and 2.2% in 2016. Emerging economies, on the other hand, are set to witness a slowdown for the fifth year running. IMF projects growth in these economies to slow down to 4% in 2015 and rebounding to just 4.5% in 2016. Key risks include weak exports due to declining commodity prices and a sharp depreciation in the American dollar. The IMF also warns that the impact of China's slowdown on emerging economies may be far greater than initially estimated. India, which is expected to grow faster than other emerging economies, is not in for a carefree run either. IMF says it is revising India's growth forecast downwards to 7.3% for 2015. However, recent policy reforms, lower commodity prices and a consequent pickup in investment should help growth tick higher to 7.5% by 2016, hitting 7.7% by 2020. The other good news for India is that consumer price inflation is expected to decline to 5.4% by 2015. The warning here is that the real policy rates will have to remain tight if medium-term inflation targets are to be met. In Mumbai, Ritu Singh.